Basically, what you have is very significant geopolitical ramifications, very significant ramifications for the oil markets, also significant for energy stocks. But beyond that, we don't think it's going to have a long-lasting impact in terms of the U.S. equity markets.
So, Matt, if that's the case, does this derail things? The thesis right now for the overall markets, is this particular geopolitical risk in the Middle East enough to take the wheels off of the rally that we've seen back towards record highs?
Well, it certainly can if it continues for a while. I mean, as you mentioned, the markets right now seem to be quite complacent about what's going on. I mean, they are certainly down, but not in a major way. And the thing is about oil prices, a lot of people don't understand is that oil prices, when they go up, it's usually positive because it's usually because demand is picked up. However, when oil prices go up due to a slowdown in supply or a cutback in supply, the obvious example of that is the 1970s with the oil embargo, it's very negative because it raises costs, hurts earnings across industries. So, listening to your experts this morning on both the energy and the geopolitical side of things, it seems to me this could be last a little bit longer than a lot of people think. And with the market near all-time highs, it could have a little bit more impact than the markets are showing right now.
Matt, the bullish case is evident. The U.S. economy is growing, albeit slower, but it's better than a lot of other places around the world. The investment thesis for record highs has support. However, are there signs out there that we could be due for some kind of a pause or a pullback given the current macroeconomic situation around the globe?
No question. I mean, as you mentioned, there's a lot of positive news out there, but there always is when the market's reaching all-time highs. We've kind of reached these highs several different times over the last 2 years, and each time we seem to fail to break out because the overall growth is really not there. It doesn't mean that when the market's going to suddenly go into a bear market, that the economy is going to go into recession, but you don't need a recession to have a deep correction. And when you have situations like these on the geopolitical side that aren't really being priced in at all, are brand new, the risks are there. And I also think this big move we've seen in the bond market in the last week or so has been very technically been done for technical reasons, not for a big pickup in fundamental positive reasons. So I think the rotation we've seen lately may not last a whole lot longer.
All right. So David, I mean, we're 1% away from record highs. You buy stocks for clients for a living. Are there still places that you want to commit capital to, given the fact that we are a stone's throw away from the most elevated levels we've seen in the stock market ever?
Well, there are definitely places that you want to buy individual stocks. We wouldn't make a new allocation to equities at this point. We think we're going to be in a trading range, and you could have significant ups and downs.
So what kinds of stocks are we talking about? Are they energy stocks on the value side? Are they utilities because of the safety play?
Definitely not utilities. They're selling at very rich valuations, so we would avoid that. We would avoid REITs. We have liked energy prior to today, so we like energy a little bit more after today. We would not buy the stocks on the open. Oil prices were up 20%. Now they're up about 9 or 10%. So we think the oil stocks will spike higher on the open, probably drift lower during the day. But if you have a 6-month time horizon, we think this could get a risk premium back into energy oil prices, and the energy stocks should do better.
What stocks in particular? Are we talking exploration and production? Are we talking oil services? Are we talking broadly just ETFs?
Across the board. So we like Occidental. We think that stock is massively underperformed. It's too cheap. It's going to do better. We like Schlumberger. Very good outlook in the last week or two in terms of the long-term. Stock is at a very attractive valuation. Royal Dutch. Beyond that, we do also like the financials.
All right. Matt Maley, last word to you here. Is there any place that you think we could find opportunity? Just a handful of seconds here left for you.
Well, I totally agree with your other guests on the energy sector. It is incredibly underowned, and it was already behind the level of the underlying commodity, oil prices. So if this group starts to go, especially as we go into the end of the year, a lot of people who are underperforming will play catch-up by buying the energy sector.